If you look at the trade deficit numbers, of course, we talked about how gold and silver prices have behaved this year. It's led to very strong gold demand in India, and especially in the month of October. We saw very sharp spike in trade deficits. So if you remember, in October, the trade deficit widened from 33 billion to 42 billion because of very, very high gold imports. If you see that in October, the gold imports went from 9.6 billion in September to 14.7 billion. That was also related to festival related and wedding season related demand. But as we see in the subsequent month, which is in the month of November, the trade deficit has materially improved. If you look at gold imports, they have come down from $14.7 billion to just $4 billion. So overall, a very sharp reduction in gold imports, which has led to a material benefit in trade balance. Even if you look at non-oil service exports, they also rose by about $3.8 billion, led by engineering goods. In fact, if you look at post the tariffs, especially the penalty tariffs of 25% in the month of August, we saw exports to the US declining by 10% in September, October. Probably one reason was also the front loadings, because as exporters feared the additional tariffs, they shipped most of their near-term exports in the month of August itself. But yes, we did see fall of 10% in September, October. If you look at November, again the exports to the US have picked up, and now they were 23% up YOY. So, but in a nutshell, what does it mean for INR? So, of course, one of the key questions that many of the market participants as well as investors have regarding INR, that's already 90, where it can go. We had discussed this in the previous presentation. Also, from a valuation perspective, INR has become quite attractively valued if you compare to its previous trend across major currencies. So, from a relative currency valuation perspective, it's become attractively valued. It's a sentiment, it's because of certain outflows that equity markets are seeing, which is leading to INR underperforming. So, probably once capital flows stabilize, once there is also stability or a truce India in the India US deal, we should see more stability and some appreciation in the INR as well.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.